Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Washington Mutual Incorporated, traded under the symbol WAMUQ. Per the request of several members at TimelessWealth.net, I'd like to offer an update to the chart concerning the price action of Washington Mutual Incorporated. Last time I annotated this chart, I left it looking something like this, and that was coming off of this trading session right here. Originally I began with this one, which would have been, I believe, Wednesday's trading session, so that last, or rather second last trading session, 2009. So something that I mentioned, what I had mentioned rather, looks something like this. I mentioned that this was a pretty critical resisting level of 15 cents or so, and what happened on Thursday's trading session, which would be the last trading session in 2009, the price broke above this and closed above it, more importantly, and this became a key supporting level. I had mentioned that 19 was probably the most crucial level going forward, so let me just circle that so you can keep that in mind. And what happened was the price did test that mark the session afterwards. However, the market retraced, the price declined, and more importantly, we did not see any bearish activity per se, just based on the volume price correlation. So these darker colored bars would represent the volume that came in on this declining period. You can see a price decline, as did the volume. So from a long-term investor perspective, this was very good to see. The market declines, and that's natural, and what we'd like to see is lower volume as opposed to what we saw back here. And now we can see that coming off of Thursday's trading session, we had above average volume as the price appreciated 16% to close the session at 17 4/10 of a cent. Notice that as we broke above this once resisting trend line, the price retraced and once again tested this mark, and as you can see, we've clearly bounced off of this mark. In fact, this lower wick on that's Wednesday's trading session, which had a low of 14.5 cents, bounced right off of the 10-day simple moving average support at 1 4/10 of a cent support. I'm sorry, let me correct that. 14 4/10 of a cent is what I mean to say. So that'd be this blue line right here. I don't know if you can see that, but it's also indicated right here. Now keep in mind that although the market may go through rallies and declines in price, the overall picture is quite bullish. I know I indicated this last time with my prior videos, and they are all available at TimelessWealth.net under the section Publications. So at any point in time, feel free to review them and look at what I talked about before and how the chart has progressed since. So this is the uptrend line I drew before, and as long as this trend line holds, I believe we will continue to see very bullish activity. It was nice to see that parabolic SAR fell. I believe it was at 18 9/10 of a cent at one point. And you can see that trading session, although the price almost hit a brick wall, if you will, at 19 cents, it did take down the parabolic SAR. Now parabolic SAR is trending underneath the candles, which is always a bullish sign. So going forward, what we're looking at is resistance at the 19-cent mark. We're looking at resistance after 19 cents, again in the event that the market does appreciate above that mark. Critical resistance at 21 cents, and then once we progress to that level, most certainly I'm sure that members of TimelessWealth.net will request further updates to see how the chart's doing. But being realistic here, there's absolutely no reason why the chart can't consolidate here and hold above this trend line and then break out. So what I'd really like to see is for this relationship to hold. That is, on days when the price appreciates, I'd like to see above average volume. On days when the price declines or retraces, which again is natural, I'd like to see below average volume. So in that sense, we're looking at a bullish market. And what this does for the chart, it makes this uptrend very healthy, very natural. You can see that with the relative strength index, because of this decline, we're not overbought anymore. It's considered that after the relative strength index peaks above the 70 mark, the price is overbought, or the market is overbought, if you will. And thanks to retracements in price, we can see that there's quite a bit of room for growth here, and we still haven't seen that momentum crowd that comes in when we see the RSI spike well above 70, like in this period right here. So the same picture mostly on all of the indicators. I like to follow full stochastics, and you can see here that we haven't peaked above the 80 mark, so we're not overbought whatsoever. In fact, there's a lot of room for growth. And with the money flow index, the picture is one and the same. There's just good volume coming in, and for that matter, a bullish market where the volume is greater on up days and smaller on periods of declining price. Once again, this was Edward Stevenson from timelesswealth.net. I encourage you to visit my site, timelesswealth.net, and check out some of the materials I've recently added, including articles, various publications, all sorts of educational materials, and give my free newsletter a try as well. What I do is I send out overlooked trading and undervalued investment ideas, and we've had quite a bit of success with a few of the past ones we've sent out, so it's definitely worth giving a try. Again, that's timelesswealth.net. Thank you for listening.